So we also saw the drop in container flows out of China. We wrote an article last June, on June 6th, it was going to be a collapse in imports into the United States from China. There was a lot of folks that were defiant that wasn't going to happen.
Before we get started with the show, here's a quick word from our sponsor, Global Training Center. As trade compliance professionals, you want to make sure that your procedures and documentation are completed as correctly as possible to avoid any delays and possible fines. We provide a range of trade compliance courses that will fit your needs. From in-person or web training to recorded on-demand courses, we can train one or even thousands on your team through your learning platform or on our portal. We can even customize a private session for your team. Go to globaltrainingcenter.com to find out more.
Folks, we're back for another show with Simply Trade, and we are excited about things going on. We thank you for our listenership. I keep saying that. Lalo and I are very humbled by the results that have been going on. Folks, I mean, our show's trending up. It's just because of y'all. You're sharing us, you're liking us, you're making comments. Lalo, I got to tell you, man, I'm just tickled pink on some things that are going on so forth. But how are you doing, my friend?
Doing good. Getting ready to, as we record this, we're getting ready to go to yet another trade show and preparing all our equipment and everything, trying to make sure that we're set up for that. And but yeah, like you said, our listeners are really coming through and allowing us to grow the show and even at different formats. So we're really excited about all the different things that we're doing.
Well, and every time we get to go out and do a public appearance, it's one of those that, folks, please come by the booth. We're going to be at ICPA and in the fall conference in San Antonio. But the other is that it's just so humbling. It's so fantastic, especially those that have come by, the rookies in the industry that seem to be learning, and then the seasoned folks that are like, man, we're challenging them to think, and that's what we want. So anyway, today we've got a great show that's going to be coming up, and there'll be a little different avenue on some things here, but it's going to be something that for all of our listeners, folks, this is going to be one that I think talking about the transportation industry and what's going on, some of the trends in that and all that. And we've got somebody that is probably going to forget more than I'm going to get to learn on this. So, Lalo, why don't you introduce our guest? Because this is our guest.
And they literally,
I can't even talk.
Yeah, and they literally write the news on logistics. I mean, literally, the name of the company, FreightWaves, and we have as our guest the CEO of FreightWaves, Craig Fuller, who also has a nice, cool little side hustle with another magazine called Flying Magazine. But we may or may not touch on that. But anyway, I've known Craig here for a couple of years now, and since we started the show, I've been wanting to get him on, and we're glad that we have him on now, and we're excited to see that because again, freight and forwarding and the logistics part is a big part of trade, and we tend to not have enough guests on that. I mean, they're far and few, and we're excited to have them here with us. So, Craig, thank you for joining us, and welcome to the show.
Yeah, thanks for having me, guys. I'm excited to be here.
Great. So you're down in Chattanooga, is that right?
That is correct.
Man, I'm going to tell you, that is some pretty country down in there. I'm in Memphis, so it's like I got the Mississippi River bottom type stuff and flat and all that. You've got some mountains and some cool looking areas around there.
Absolutely. Tennessee's an interesting state because it has, even though it's a very sort of, narrow state, but very wide in terms of sort of top to bottom. But you essentially have three different regions. You've got the Delta, where you're in Memphis. You have Nashville, which is on the plains, and then you have Chattanooga, which is nestled in the mountains. So it's for a state as small as Tennessee is, it provides an enormous amount of variety in terms of sort of geography.
The cultures, the different things, and even the music. In Memphis, you've got the blues and the jazz. You've of course, the rockabilly that came out initially with Elvis and the others in this area. You've got the country and the pop country in the central area. Then you've got Chattanooga and the eastern side of the state. You've got the bluegrass and the folk music, and all of that is rich in heritage and all that. So it's great in cultures and everything else like that. So In a world driven by innovation and global connectivity, there's one name that stands out above the rest: Schultz Trade Law. With over 30 years providing legal and consulting services to Fortune 500 companies, Schultz Trade Law knows the challenges that businesses face in navigating the complex landscape of international trade. The legal and regulatory hurdles can impede growth and drain resources. But fear not, because Schultz Trade Law has the solution. At Schultz Trade Law, they've harnessed their vast knowledge of real-world trade challenges and legal expertise to create a seamless experience for businesses engaged in international trade. Their team of legal experts know how to streamline import and export compliance, resolve trade disputes, and optimize global supply chain operations. Learn more at schultztradelaw.com, where legal expertise leads the way to global success.
Yeah, absolutely. It's a great place to live. We're happy to be here in Chattanooga, and it's been a great place to build a business.
Oh, I will say the only other thing, and we'll move on to others, but y'all downtown have revitalized that downtown, and it is phenomenal. So, folks, if you're in the Chattanooga area, go downtown. It looks great, but the aquarium down there, you have a freshwater and a saltwater aquariums that both of them are worth going through. And I got to tell you, man, that is so cool. I could spend all day in those things.
Yeah, it's done amazing for the city. It is the largest freshwater aquarium in the world. So you get some pretty interesting species, everything from Amazon to, the Tennessee River to the Mississippi to rivers like the Ganges. And so you see some pretty interesting wildlife that you wouldn't see at a typical aquarium. And then you have the ocean side, which offers some of the bigger sort of, massive lifestyle. And everyone I take, we get into this debate about whether freshwater or ocean is the better exhibit. I'm a freshwater person, even though the sharks and all the sort of really extreme wildlife live in the ocean aquarium. It's still cool to see some of the species that are in the freshwater side.
Well, and the one thing, I think there was a catfish that was big enough to swallow a man in there or something. I'm like, good, not that thing's huge.
These things are massive. I mean, it's the size of a Volkswagen. It's these fish are huge. And what they do is they live outside the dams and they just wait for the wildlife and the fish to come in, and they just eat it. It's a pretty amazing. These things can get so big.
Yeah. All right. Well, with that, Craig, let me ask you the question: is that as we're getting into, here we are in September already into the year as we're recording this, and as we're looking at things, what's I guess your thoughts regarding what's happened in the transportation industry? Obviously, things have gone up and down, and we've seen Yellow Freight. Obviously, that's a big one because it was such a large company that it finally bit the dust. I think it was one that has been on the chopping block for a long time, but who knows? I mean, they were trying to do some things there, but what's been the trend in transportation as a whole, whether it's ocean, truck, whatever? What's your thoughts on what you see so far and where we're going?
Yeah, I think we're post the COVID economy. So COVID created so much extreme for both our personal lives as well as the economy, but certainly in the freight industry and supply chain industry, we faced it at levels that really the amount of pressure that we faced in the industry was unprecedented. And that's all largely over with. And now we've had this freight recession, which really started late in the end of first quarter of last year of 2022. It got much worse as we proceeded through the year. And really early 23 has been pretty difficult. The market, however, according to our data, bottomed out in mid-May. So about May 14th was the effectively bottom of that cycle. So if you think about the freight recession, it started in March of 2022 and then ended, or it hasn't ended per se, but the continued drop in volumes and activity ended in mid-May. And we've seen it actually bounce back since then. So we're starting to see encouraging signs. I think one of the really interesting things in transportation and trucking specifically is it's a super hyper cycle. Every 3 years, typically, trucking sort of has this boom and bust. We started start it in 1 month, and then we end it typically 36 to 37 to 38 months later. And that has been the process. And you think about this cycle, it started in April of 2020. On April 18th is when we saw the COVID, when COVID was starting and sort of surging back, when the economy was starting to turn back on. It was April 18th. And then according to our data, the market sort of bottomed this cycle on May 12th. And you could actually suggest that we're into a new cycle now, and it feels pretty dire for a lot of folks. But it actually looks like things are improving.
Well, from looking at it, I know that there was several months back, regardless of what the administration is, trying to, any administration, doesn't matter who's in power, it always tries to put a, positive spin on things. And sometimes it's like putting lipstick on a pig, trying to say, hey, things are great. And it's like, yeah, right. But manufacturing orders had there was a 45% drop, if I recall, 3 months ago, that in manufacturing. I think that it appears that inventory levels are being depleted. Manufacturing demand is off. However, I think things are at a point where they're having to now turn in some orders to gain, some inventory, get some things out there. So maybe things have gotten to the point where, we've turned that corner in the last couple of months, but it still seems to be cautious. It doesn't appear that companies, and let's go outside the transportation side. You look at consumers are not out there spending yet. And it's been a hard thing for people to try and forecast for demand because the people have been so cautious. Are you seeing something along the same lines that maybe transportation is getting a little bit better, but longer term, the demand just does not seem to be going with that same cycle yet?
Yeah, there's a lot of questions about consumer health right now. Consumers have in many ways maxed out a lot of their credit lines, a lot of questions about student loans and the fact that they were deferred. I mean, $309 a month for 25 million Americans is a lot of money that's deferred. So certainly those questions are real. And the question is what happens moving into the third and fourth quarter. And if you'd asked me 2 months ago, I was incredibly bearish about the second half. But one thing I've learned looking at data, and we take high frequency data, which is one of the data sets we look at, are the we call tenders, which are EDI and API transactions between shippers and carriers. So essentially, these are when a big box retailer or a manufacturer, typically larger company, is ordering a truck, they're not calling on the phone or faxing someone an order or emailing it. Typically, it's done through electronic messages from computers. And so we look at that data, and that data tells us what's actually happening. And even when it sort of defies the expectations or sort of the anecdotal information, when the data is telling us something different is happening versus what we expect, we tend to look at the data. Now we back test it. We go and try to reverse engineer to see if there's a flaw in the data. We look at multiple data sources, but when all of the data sort of point in the same direction, it tells us that something is different. And so a couple of examples of this is if you go back and look at some of the big calls that we've made in our history at FreightWaves, back in 2019, we were very early in the freight recession, calling that this was a freight recession was coming. That was 2019. Go fast forward to April of 2020, we were one of the most bullish companies in America. In fact, Bloomberg called me the most bullish guy in America because we were talking about a rapid V-shaped recovery that was about to happen. And it was really September and October before the broader sort of freight market analysts, as well as sort of Wall Street analysts, woke up to the fact that the economy was starting to really recover and it was going to be fairly robust. And so we had about anywhere from a 4 to 6 month lead on information that was happening in the market. Fast forward to March of 2022, we were the first folks that called for a freight recession. In fact, transport sold off because we had made these big calls before and they turned out to be true. And there was still a lot of skepticism about whether that call was correct. I got a lot of vitriol from the market and from executives that were like, you're wrong. There were public CEOs of major logistics companies like C.H. Robinson, FedEx, the Port of LA, Gene Soroka, that were calling us out in the summer of 2022 because they weren't seeing a significant slowdown in freight. Now, what's interesting is if you go back to FedEx's earnings report and sort of think about it. So we also saw the drop in container flows out of China. We wrote an article last June, on June 6th, it was going to be a collapse in imports into the United States from China. There was a lot of folks that were defiant that wasn't going to happen. In fact, FedEx's incoming CEO had just taken the reins from Fred Smith and had their investor day at the end of July and talked about how great the second half was. They weren't seeing a slowdown. Now, our data presented this on June 6th, and this was the end of July. And this is a company as big as important. You have a background working for FedEx. You know that it has a real good pulse on the economy. But one of the things we've learned through multiple cycles is that oftentimes the biggest companies in the space don't actually see the recovery or the down. They tend to be later in the market of seeing things happen because they're so big. It takes a lot to move them. And what we're seeing is that this is starting to play out in this type of recovery. Is we believe that the freight market is recovering. Our data suggests that's the case. We're starting to see things really turn up, but you're still hearing a lot of skepticism and negativity in the market. And that's probably going to play out for a couple of months until people start to feel it themselves. One of the things that's real about this industry is it's massively fragmented. And these signals that we're looking at tend to be way upstream, 4 to 6 months before it's really felt in the market. And so, my prediction here, this is, we're sitting in here in early September, is by the time we roll into sort of, November peak season, things will be better than what people anticipate they are. I'm not calling for a robust, massive recovery, but we are seeing things turn up compared to where they were.
Well, to your point, I will say this is, yes, there has been a significant drop of imports directly from China. But I think what has been a driver on that has been, of course, the China tariffs, as we call them, or the Trump tariffs, and the Biden administration has left them in place, has had some impact because they're continuing on. But I think that one of the things that has been a bigger factor with China is people are finally moving away from them because it's just been so much of a hassle. And the Uyghur Forced Labor Prevention Act, the anti-slavery legislation that went through, I think, had a major impact on China being a source. And as I was looking at it, as a result, China was the largest country importing goods into the U.S. And they have dropped to number 3. Mexico went to number 1, then Canada, and now, and so China number 3. And looking at it is there's if I recall correctly, there's been about a 25% drop in volume out of China. However, that 25% has been spread out from going to Vietnam, Malaysia, and a couple of other countries, as well as imports as a whole in the U.S. has dropped a little bit. And so I think there's a lot of people that are sourcing domestically now. So all said and done, where we're going with this is it puts more emphasis again on, other routes, different things. But if you're banking on a whole lot out of China, then the scenario there, you're going to have to move, maybe resources and beef up some of the routes of other countries as well as domestically. So that's that kind of holds with what you're just saying. I think is that in looking at it, if I were a purchasing person or sourcing person of what you're seeing, where should I be looking in a sense from what you're thinking it would be the best opportunity then for, as far as transportation rates and volumes and all that? What would you look at there, Craig, from if I need to maximize my efficiencies and my, trying to get bigger, better, faster, cheaper? What would you look at?
Yeah, so I'm going to pull a Wayne Gretzky. You go where the puck is trending, and I think what we're seeing is really exactly what you talked about. Is we're seeing, I would argue that we've seen peak container. I think container flows, particularly out of China, the idea of these mega ships being so big and continue to get bigger, I think is largely behind us. We're seeing a fragmentation. One of the advantages that China had was that it had incredibly cheap labor. As you pointed out, it didn't have to adhere to sort of Western norms of human rights or environmental policies. And they've largely exhausted a lot of their advantages on the global stage. And then you combine the geopolitical stresses of potential outright military conflict. And if we don't go there, we certainly know that you have a autocratic regime, which makes a lot of Western companies very nervous, rightfully so. So we're seeing companies start to evaluate the advantages of being in China versus places like Mexico, Colombia, Vietnam, Malaysia, and realize that, frankly, high concentration in China is a massive geopolitical risk. And if you're managing a supply chain, your role, and this is the thing about supply chain, is typically you're not the hero of the company. You're not, CEOs, unfortunately, are not typically rewarding their supply chain people because things work. What happens is they may reward their supply chain people because they get them out of something that is disrupted and they save them. But these are typically the unsung heroes of the companies. They need to be thinking about how to de-risk their business. And one of the risks is having high concentration in a potentially a geopolitical hot zone like China is going to be an enormous risk that unfortunately you can't quantify what that means. And so this is what's happening. This is a trend that's happening. To sort of back it up with data, we look at the trucking market specifically in terms of what we call market share, relative market share. So let's take out all of the individual freight markets in the United States, and let's look at it in terms of how the market's trending, what the market share is per market. So this gives us a perspective. What it does is it eliminates the sort of economic noise of up or down, because you can certainly have in a good market, every market's going to get better. In a bad market, every market's going to get relatively worse. Looking at market share tells us who's gaining, who's losing. So one of the really interesting data points are there are 3 major cities in the United States which are seeing robust increases in truck origin freight, so freight that originates in those markets. And those are, and we can guess why this is the case in a second, it's Detroit, it's Houston, and it's Laredo, Texas. And so let's think about why those 3 markets are really interesting. One is Detroit auto is going through a whole new generation with electric vehicles, and autos have done exceptionally well over the last couple of years. It took a while to sort of come back and then have stayed fairly robust even as the broader part of the industrial cycle has slowed down. So Detroit has done well. And so it's, a lot of the UAW question around the strike, which we don't know the answer and whether the UAW is going to strike. That certainly could be an impact. Houston has done well, and a lot of it's related to its chemical and petrochemical and commodity exposure around oil and energy and nat gas. But also, I think importers have started to look at Houston as a viable import market for containerized freight. So we're seeing that also look pretty robust as a market. It also benefits from exports for the same reason in those petrochemical commodities. And then Laredo, as you mentioned, we're seeing the resurgence, and I'm going to call it the NAFTA trade, because NAFTA is a lot easier to say than UNSCA, or however you say that.
NAFTA 2.0, yeah.
Yeah, like just call it NAFTA. But we're seeing the resurgence of NAFTA. Lalo is in El Paso. I went to school at Baylor in Waco, Texas, in 1997 is when I started school. And I remember NAFTA was the rage. Central Texas was sort of benefiting from this. And, after China entered the WTO, Mexico effectively lost the momentum. It didn't lose its position as a major importer of freight, it continued to grow, but it lost the momentum to China. The story became about China and the United States versus Mexico and the US. And we're seeing that come back. And we're seeing it in the data. We're seeing the massive expansion of North American manufacturing at levels that we haven't seen in decades. And a lot of this is really public policy, sponsored by your federal government and tax dollars, as well as just supply chain professionals that have said, hey, I can't expose my supply chains to the political whims of an autocratic regime and geopolitical tension that's probably inevitable. I need to do something in terms of thinking about my supply chain.
Well, and to your point, one of the things too that is a major factor that has come up now and has come up several times, and quite frankly, the longshoremen unions along the western seaboard there have, I think they've really done themselves a lot of damage, especially in this latest strike threat and whatnot. And of course, in the western ports of Canada, they actually did go out on strike, but they collaborated all along the western seaboard there, and people are just fed up with it. And you were talking about Houston, and you look at it and go, by far, it would be better to come through the Panama Canal if you're coming from Asia, or from Europe, and come down and come up through the Gulf and hit Houston. New Orleans is always a good one, but you're right. I mean, Charleston, Savannah, Georgia are great ports that people look at and go, they're just tired of being held hostage over certain situations. So everything gets worked out. Okay, we got traffic going, and then the unions wind up on the western seaboard there, and it's like people are fed up with that stuff.
Yeah, California has not done itself any favors. I mean, it's such a strange state to have such a vibrant economy. Some of the world's most innovative companies that are based there, great universities and research institutions. I mean, really, the 20th century was a story of California. I mean, if you take out Detroit, sort of interesting. You think about Detroit sort of started the industrialization of the 20th century, and California sort of ended it, sort of capped it. But so many great innovations happened in the state of California, and it just continues to shoot itself in the foot, whether it's union and sort of its pro-labor, its environmental policies, which are not grounded in economics or even science in some ways. And so we're seeing a lot of business shift towards Texas. One of the interesting things about Texas is that not only is it, in 20 years, it will likely be bigger than California, both in population and economy. And its biggest asset is its border to Mexico in terms of its geography. Like, we think about California has the great weather and beautiful scenery. California is an amazing place. If you can get rid of a lot of the Californians, it's an amazing place to be. Texas doesn't have that, frankly. And I mean, no disrespect, because I lived in Texas and absolutely loved it at one point in my life. It's an ugly state geographically. It's pretty in its own right, but it doesn't have the advantages of other parts of the country. I live in Tennessee. I'm biased how pretty it is out here. Texas is kind of an ugly state, but it's a great place to raise a family. It offers a great economy. It's got a very pro-business, and most importantly from this conversation is it provides a fantastic base for manufacturing and distribution because of its ties to the rest of the continent. And so I think because of that, you have to be incredibly bullish on Texas. It's so blessed with natural resources and policies that allow us to exploit those resources and build our economy. So I'm incredibly bullish on Texas. Texans could vacation somewhere prettier, maybe in the mountains of Colorado, but they certainly have the advantages from a strong economy. And Lalo, I mean, no disrespect, I think El Paso is one of the coolest towns of all, and I am a fan of the desert, but it just doesn't have anything on California in terms of beauty.
No, I think you're right. Well, we have the world's largest beaches, though. I can just say that.
You do, but it's like South Padre, and you have people driving Jeep on it. It's a little different. So,
well, I meant here in El Paso, we just don't have the water. Yeah,
just pure sand. Is that what you're referring to?
Yeah, we just don't have the water. There's a lot
of that for sure.
Yeah. That concludes part 1 of this 2-part episode. Thank you for joining us, and we invite you to tune in to part 2 of the continuation of our conversation with Craig Fuller. Hope you enjoyed. Thank you, everyone.
Thank you very much for joining us. Simply Trade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show or would like to sponsor Simply Trade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at SimplyTradePod. Thank you again for the privilege of your time. Happy trading. Simply Trade is not a law firm or an advisor. The topics and discussions conducted by Simply Trade hosts and guests should not be considered and is not intended to substitute legal advice. you should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.